Protests spark in China. Investors now demanding their money back as another Chinese asset manager misses debt payments. What's the status on China's property crisis? American financial giant JPMorgan said China's economy is staring down the barrel of a vicious cycle, while the head of the Chinese Communist Party calls for patience. The Inflation Reduction Act marks its one-year anniversary. Biden touted the achievement, but who is really reaping the benefits? What do you think? Let us know below and subscribe if you haven't already. Welcome to China in Focus. I'm Tiffany Meyer. Angry protests erupting in China as investors demand their money back. That's after a major Chinese asset manager missed payments on its debt, stoking fears of default. The news comes as the country's property sector flounders. The group reportedly manages 1 trillion yuan in assets, or around $137 billion. It's already stopped paying investors amid the fallout of China's struggling real estate sector. Investors seen facing off with police as they demand their money back. A subsidiary manages more than $90 billion of assets, a large portion of that tied to the real estate sector. Its missed payments had added to stress in the financial sector from the country's worsening property crisis. Anxious Chinese investors now worried about contagion across the country's financial system. They're asking dozens of other listed companies whether they were exposed to the trust company. This is the latest in a slew of financial woes plaguing China. That's as fears spread that China's deepening property sector crisis is spilling over into the financial industry, worth trillions. American financial giant JPMorgan is sending out warnings against China, saying almost $400 billion debts in China are at risk of default. The bank said China might face a vicious cycle. China's largest private finance company, Zhongji Capital, has been missing payments on high-yield investment products, and it's prompted concerns over a potential domino effect. Local media have called the firm the Chinese Blackstone. JPMorgan estimated that approximately 13% of China's total assets poses heightened default risks due to their ties to the company. Be patient. That's what Chinese leader Xi Jinping has to say about China's spiraling economy. Chinese state media published Xi's comment Tuesday. He originally made the remark in February, calling for patience as the country battles economic woes.
China's economy is having a huge problem right now.
This magical China growth story that was not based on any reality. What that's done is since then there's been a massive market sell-off, a lot of weakness in China.
But will investors stick around through the slowdown? Foreign companies and investments are pulling out from China, while Xi's regime has been trying to stop that outflow. To help, China's State Council published new rules Sunday to attract and keep foreign investment, including lower tax rates and a streamlined visa process. On the world stage, concerns over China's unstable market are rising, helped along by worsening geopolitical ties between the U.S. and China. On top of that, revised antitrust and anti-espionage acts have given Beijing more power to control foreign business activities inside Chinese borders, presenting added risks for business owners. Xi Jinping calls for patience for the country's economic slump. What does it look like in China? Consumption slowing down, property woes deepening. The country's economy is facing some of the strongest headwinds in years. Just how bad is the slowdown, and is there a way out? Let's take a closer look.
Is China facing a deeper and longer-lasting slowdown in growth? From retail sales to industrial output, July's numbers fell short of expectations. Some fear the country's economy could be reaching a crunch point. So, how much worse can the slowdown get? China's been here before. Alarm bells over growth went off during the 2008 global financial crisis, and again in 2015. To cope, Beijing boosted infrastructure investment and encouraged property market speculation. But that created debt, and the property bubble has already burst. Now there's really only one source of demand to tinker with. That's household consumption. So why is that so important? Even before the pandemic, China's consumption as a percentage of GDP was among the lowest in the world. Economists say that weak demand has dampened appetite to invest in the private sector. In fact, the gap between consumption and investment is deeper than Japan's was before it entered its so-called lost decade of stagnation in the 1990s. And remember post-pandemic revenge spending? Well, unlike the West, that never really happened in China. People were largely left to fend for themselves during the health crisis. So now the question is whether China can convince households to spend more and save less, and whether that can be enough to compensate for other weak points in the economy. Ultimately, that will reveal whether this slowdown is different. In terms of what could help, economists are watching for Communist Party measures that would boost household consumption. Think big tax cuts, unemployment benefits, higher pensions, and better public services. And yes, China's central bank did surprise markets by cutting interest rates in mid-August. But economists warn that won't be enough to make a meaningful difference. What those cuts will do is signal to markets that officials want to stimulate the economy.
And a new record for Asian stocks. Market shares slumped to a 9-month low Thursday, while the dollar peaked at a 2-month high. China's stock market has seen an ongoing slide over the past few weeks. A slew of economic data show a tentative post-pandemic recovery. But this comes along with a deepening crisis in the real estate sector. Beijing's recent measures aim to boost investor confidence, but with little success so far. According to an Asia equity strategist at HSBC, the appetite for investing in China right now is very low. Just 4 months to go until 2024, and President Biden is celebrating the 1-year anniversary of the Inflation Reduction Act, a signature of his administration. Biden touted the achievement this week, taking a swipe at Republicans. So who reaped the most benefit from the bill? Let's take a closer look.
It's been 1 year since President Biden's Inflation Reduction Act got signed into law. The administration celebrated on Wednesday.
Republicans have repeatedly tried to repeal key parts of the Inflation Reduction Act, including the Speaker of the House now, taking credit for the billions of dollars in private investments and thousands of jobs coming into their states.
It's now law.
A big part of the law aims to boost clean energy manufacturing at home to help the U.S. cut dependence on China for solar panels and electric car batteries. But who's reaping the most benefit? An analysis from the Wall Street Journal says so far, foreign companies are among the biggest winners. The law spurred over 200 clean energy projects, totaling at least $110 billion investment dollars altogether. But over 60% of the spending involves foreign companies, including China, Japan, and South Korea. One example is Japan's Panasonic. It's projected to get over $2 billion in tax credits. That's based on its production capacity. Panasonic runs a lithium-ion battery plant in Nevada, is building another in Kansas, and eyeing a possible third on U.S. soil. Even though Biden's Signature Act looks to shore up domestic green energy, right now foreign companies dominate the realm. From raw materials to finished parts and EV batteries to solar panels. Over $8 billion investment dollars sparked by the law come from Chinese companies or companies with deep ties to China.
I think it's fair to say that this is not enhancing competition with China. If anything, it's simply mimicking particular policies that China itself has followed in terms of trying to subsidize and promote particular sectors of economic growth.
Many are watching to see if Washington can close the loopholes. The Treasury Department is working on the rules for giving out EV tax credits. It has floated the idea of disqualifying certain cars from tax credits if they use battery materials made by Chinese companies.
The Big Apple is signing off of TikTok. The New York City mayor's office just updated the bio of its official account on the platform with this message. This account was operated by NYC until August 2023. It's no longer monitored. Let's dive in.
New York City has banned TikTok on government-owned devices due to security concerns. Wednesday's announcement meant it joined a number of US cities and states in placing restrictions on the short video sharing app. The administration of New York City Mayor Eric Adams said TikTok posed a security threat to the city's technical networks. The city's agencies must now remove TikTok within 30 days. Employees will also lose access to the app and its website on city-owned devices and networks. TikTok is owned by Chinese tech giant ByteDance and used by more than 150 million Americans. Some US lawmakers have called for a nationwide ban due to worries about possible Chinese government influence. TikTok said it has not shared and would not share US user data with the Chinese government. It also claimed to have taken substantial measures to protect the privacy and security of TikTok users. Top US security officials, including FBI Director Christopher Wray and CIA Director William Burns, have said TikTok poses a threat. Many US states and cities have restricted TikTok on government devices. Montana recently passed a bill banning the app across the state. The rule is due to go into effect in January, but has been challenged legally.
Taiwan's vice president promising to treat peace and democracy as a lighthouse Wednesday. He shared that message while making a stop in San Francisco on his way back to Taiwan.
Here I make my promise to everyone. Going forward, I will do all I can to lead Taiwan continuously forward, with peace as a lighthouse and democracy as a compass.
Beijing responded to his U.S. stopover by calling him a separatist and troublemaker. Lai aims to paint Taiwan as the democratic world's MVP, most valuable player. Beijing claims Taiwan is part of its territory. Taiwan staunchly denies Chinese sovereignty, standing closely with democratic societies around the world. Lai also called U.S.-Taiwan ties unprecedentedly good. Chair of the American Institute in Taiwan, Laura Rosenberger, attended the banquet, which highlighted U.S. support for the island. She stated, quote, Taiwan is a crucial partner in U.S. efforts to maintain global peace and stability, including in the Taiwan Strait. A bird's eye view and a warning from the press. China might be building an airstrip on a disputed island in the South China Sea. That's according to a report from the Associated Press. Both Taiwan and Vietnam claim this island as their own, while China claims almost the entire South China Sea. That's in violation of an international ruling. News of the airstrip comes from a satellite photo the agency captured. Construction in the area first appeared in the beginning of this month. That's alongside 7 artificial islands made by China, all of them equipped with airstrips, docks, and military systems. Analysts point out that the runway is long enough to handle small military aircraft like drones, but not fighter jets or bombers. How bad is China's property crisis? Real estate giants have defaulted one after the other in recent years. But what's happening right now? And is there an escape hatch for China's property crisis? Stay tuned for more coming up tomorrow on China in Focus. That's all for today's China in Focus on YouTube. We're now sharing a shortened version of our program here after being demonetized for 2 years. Here's what to look out for in our second half. Can foreign adversaries shape our legislation with help from the power of lobbying? We zoom into how China's massive pocketbook is impacting U.S. law. Rex Lee, cybersecurity advisor at MySmart Privacy, first broke the story 2 years ago. We sat down with him for more details. The full episode is available on our partner platform, Epic TV. To sign up, click the link down below. Thanks for watching China in Focus. I'm Tiffany Meyer. See you tomorrow.